Hello traders, my name is Yaroslav Burchenko. I am a market analyst at olymptrade.com, and today I have an extra special webinar in store for you guys. Today's topic is a must-have basic understanding of market breakouts. Has this ever happened to you? You scour the markets for a good breakout. You see a breakout, and after that you enter the position and in the direction of the breakout, and the price reverses and you catch a stop loss. I'm sure this has happened to everybody. So today we're going to discuss false breakouts. For those of you who stick to the end of the webinar, I have another prize for you on top of the information you will receive. Now, before I get way too far ahead of myself, can I get a roll call if you guys can hear me and see me? Where are you guys trading from? So Trump won, hey, the US elections? No, not yet. They're still counting the votes. The new mail-in service of voting by mail, it's going to take a few days to count. So we're not going to get to know the answer quite yet today, but I bet I got you that Trump won. Everybody's worst nightmare. I'm going to go ahead and say that. So, all right, you guys can hear me and see me, I presume, and we'll get started. Hey, so welcome, by the way, Shabana Khan. Hey, welcome, buddy. Good to see you. Madhu Yadav. Hey. Oh, from India, from Nigeria. Akinowi. Welcome. All right. Good stuff. Good stuff. Oh, from Turkey. How's the coronavirus situation, by the way, in your guys' country? If you guys can really quick say if you guys are on lockdown or if, you know, commerce and consumption is doing fine, flourishing. I'm really interested to hear if anybody from China is here with us in chat. If you guys can go ahead and say that, how the situation is and how production, more importantly, is it maybe in your area. I'd like to know that information from somebody. Good stuff. Yeah, I also think Biden will win. It's going to have a great impact on the market situation. And by the way, both the NASDAQ and S&P 500 have put in stellar days. So this kind of bullish growth is, you know, more of a sign that there is inherent strength and the elections are slowly stabilizing. But we do need to still make that final push. There's still that opportunity that Trump may win, and that will cause, of course, some more chaos, I guess, around the world. So let's get to the main topic of today: how to spot false breakouts. You're not going to find this anywhere else. I cut up the information into rules. So for those of you that have a rule-based trading system, you can really use this, you know, to help you out. So how do we avoid false breakouts? The first thing we're going to start with, hands down, you guys. Rajesh, are you really from the Bermuda Triangle? Lockdown in India. All right. I see. Same thing, lockdown in Russia. I am from Russia. No Vunil. All right, you guys, so let's get started. First thing you want to do when you're trading is knock down your multiplier. When you're trading indexes, we don't have that big of a multiplier, but when you're trading currencies, it can be huge. The first thing you want to do when you want to avoid false breakouts is to lower your multiplier. We are already in a move. You're already making money. It's best to use a multiplier that's somewhere in the middle, just so that in case there's volatility, you won't get knocked out. Now, remember, price needs to retrace. Anytime there is an action, an energy is used, there has to be a reciprocal. There has to be a retracement. It has to kind of fluctuate back into time over a long period of time. And so what you want to do is wait for the candle to close. Now, I do trade intraday as well. I trade on news events, like we have the non-farm payrolls coming up this Friday. It'll be a great time to drop down to the hourly time frame and function on the close. I guess when you're trading the news, it's not as important, the previous close, but when you're trading and the market is it's not impacted by economic news, it's really important to trade using price action. It's important to follow what the candlestick patterns that you see on the graph. So I do want to find a certain breakout level for you guys today so that we can kind of analyze it. But as I go down the list, you guys can write down all of these rules in your rules-based breakout system. So rule number two is very important. Pay attention to where the market structure is where you place your trades. Where will you put your stop loss? That's the most important thing you have to understand when you're trading breakouts, is where is the stop loss. So if we enter a position from here, and we remember we use the previous market highs and previous market lows to dictate where our stop loss would be. And also we want to uphold that risk to reward ratio of at least 1 to 2, 1 to 3, even better. So if we make an entry point right here to the top side after the breakout has occurred, where's our stop loss going to go? You know, it has to go somewhere around where the moving averages are. These are the closest levels. So that's quite a ways away. There's no grand opportunity to save yourself from risk here. This is a very risky trade if you get on and follow this breakout. So that's kind of rule number two. The breakouts that you want to take are ones that maybe follow after a really close period of consolidation. So we want to have a breakout, then have a period where traders get in, where positions are increased, and then after the breakout of that short little corridor is where you want to get in. The best example I have, you guys are gonna, so this is my live account. This is gold. I want to show you guys. Let's maybe move on to the demo account so that my trades don't get in the way. But this is a position that I've been looking at over the last few weeks. So remember that gold has a market structure, and this is what you guys have to understand whenever you're trading currencies or stocks. Understand the market structure. Like a flag pattern is very common in the stock market, where triangle formation is very common in the forex market. So as you gain an understanding of the playing field, of how that currency breaks out and continues, you can then start to pick entry points. Now, as you can see, after the breakout, after the initial breakout, there's a long period of consolidation. This is over 3 weeks of trading of static and a lot of downside pressure, guys. Look how we broke the lows of, I believe, yeah, we broke the lows of October. The whole month of trading at the end of October. And so this was in my positions when I saw this, that price didn't continue even lower. It was a good chance to buy in, because this was a false breakout. So this red candle here, that was then followed by inconsistency the very next day. I believe my positions were entered right here, and then we can double check what I said. So I made one entry on the premise that it was going to be a false breakout here. This was a $2,000 trade, and then I got back in when I noticed this red candle. So that's a sign of inconsistency. That means whenever you do have a strong breakout, and we'll get to this. So first, I'm going to teach you guys how to find false breakouts, and then I'm going to teach you how to find good breakouts, the ones that you should take. So this is a great example of a false breakout. Now, can anybody in chat, I'll answer your question, Navu Neil. Can anybody in chat tell me what the breakout was here? So how well do you understand the graphs that I show you guys? What was the level that we broke here with this red candle? If anybody could answer in chat. So I'll talk about Navu Neil's. There's, I believe, a really good video on candlestick analysis, or a presentation. So Navu, if you go here and then click education, there is a video on, let's see if I can find it. Fundamental analysis. So technical analysis, here you go, trading with candlestick in details. So Navu Neil, just go ahead and click the help button, and then education, and then trading with candlestick in details. That course should help you out, my friend. So for any of those that said, yes, Rohit Rana, proud of you, my friend. Absolutely, we broke a really strong trend line here, the 100 moving average. That was the level that, when broken, really made certain traders sell, like, oh, gold broke that level, it's becoming bearish, and B, a lot of stop losses were taken. In fact, my initial trade that I opened somewhere over here after this retracement. So the premise for the trade was after we break the bearish trend line, we are going to turn around and go to the upside. But the election, the US election, caused a lot of disturbance in the market, a lot of uncertainty. That is coming to pass, you guys. When we see the NASDAQ and the S&P growing, that's coming to pass. And what do you guys think? The US dollar is growing. As the stock market grows, the US dollar sinks. And so we can see that other currencies are becoming stronger, are taking the lead. So back to the gold situation. Timing, again, is something they need to pay attention to, and then where your stop loss is going to be. So, of course, down below this level, or even below the green line, is where my stop loss is. So when I saw price break down the trend line, and then the following day of trading, I stayed out, right? I was nervous. I already had a $2,000 trade open, and I thought, all right, I'm gonna wait it out, no more doubling down. But as soon as you get that first inclination of weakness where the following day is a short day, that's when I got my attention. And then when we had a bullish day after that, that's when I really got on. Then we had the weekend, and additional bullish trading ensued. So I do believe gold is going to continue up higher. The next breakout level that we're watching for gold is 1,930. So as price approaches that level, that's where we may have a retracement, where price may come back and lower a little bit before it continues higher. Now, the third rule, this is what I want you guys to write down when you spot false breakouts. The third rule is don't chase a real breakout if you are late to the party. Now, does that make sense? Another way, I guess, of saying it is FOMO, fear of missing out. So if you see a breakout that has happened already, but you were late to the party, it's not always good to get back in, because what is going to happen is that price is going to make a correction. People are going to fade the break, which is very common in all of the markets. It's not just a Forex thing. It's not just a stock thing. It happens in commodities. It happens to indexes, which is an aggregate of many financial assets. So let me give you guys an example. So if we're looking at the NASDAQ market, obviously the NASDAQ, strongest tech companies in the world, part of the strongest economy that is going to have a leadership change. All of this is positive news, and we're obviously waiting for a breakout to the top. Now, what is the level that we're going to break at here for the NASDAQ? Well, very simply put, somewhere around the highs of mid-October, so 12,200. What's going to happen when price comes to that? Do you guys see we already came from the lows of a very strong moving average. The 100 moving average is an important level to trade off of. Let's come back to the example of what a false breakout looks like. This is an example of a false breakout. The candle touches the line, but the close is either very close to the line or above the line. This is also a sign of weakness. A sign of strength would be the initial breakout after the coronavirus. So after we break the line here, so that the break looks solid. This is what a solid break looks like. You want to have a solid, again, this would cause some speculation on my part, but you can definitely judge by the size of the candle. If the candle is large, it's filled completely with green or blue or whatever your bullish color is, then you definitely are looking to trade in the direction of the trend. Excuse me, guys. All right, so does anybody have any more questions? Can I get some questions about how to avoid false breakouts? This is probably the #1 issue that a lot of my clients have, is that they get caught in a bullish trap, in a bearish trap, and there's a lot of details, and I'll teach you guys another helpful hint more closer to the end of the webinar. So use a bigger multiplier. Now, how do you manage your risk? How do you manage your risk? That's going to be the next topic we're going to discuss. Back to the US elections and the NASDAQ market. So as we're coming close to this level of 12,200, we are already exhausting a lot of the bullish potential that we have. Guys, unfortunately, I can't share my personal details with you guys in chat. But if you do want to discuss anything, right now would be the perfect time to write it. We can discuss it. We're already running on a lot of steam. There's a lot of pressure, a lot of impulse that we're seeing on this graph. So as we come close to the breakout level, one of two things can happen. We can have a continuous bullish run, depending on the optimism of US investors. Another thing that can happen is that we do have a breakout and then price stutters and then comes back to the line and recovers. That is the most likely scenario, and there's a few ways to trade that. You'll have to wait for the breakout and then receive signals of confirmation that we're going to continue up higher, whether it's inconsistency with going lower, right? If price wanted to go lower, it would go lower, but if it's stuck somewhere around this level, then it's being upheld, and that can continue for a week, for 2 weeks. That's what you guys have to be ready for. Again, this is a daily graph. Whatever time frame you're trading is going to be that time frame X3, X5, X6 when you are looking at a correction after an initial impulse or initial breakout. So what does I'll read this question. So Rahit Rana, what should be the entry point after the breakout? Good question. So the entry point after a breakout, let's see if we can find a good breakout. I don't want to go over the that example again. Okay, so we can take this level, I guess, for a breakout level. Just a little bit higher, come on. There we go. So this teal line I'm going to use, thicken it up a little bit. This teal line is the breakout that we are looking for. So Alibaba was under stress from the Trump administration. There were also all sorts of screw-ups with their shipping counterpartners, and so there was a little bit of time that we spent, you know, retracted, and also the market took some time to retract, like last week. So this is the level this was the historical highs of the stock market, or of this stock of Alibaba, that pinpointed us where we want to have the entry point. You can have it a little bit lower, you can have it there, it's up to you. The main point that we're looking for is the breakout and retracement. So this is what a breakout looks like. Unfortunately, it's really choppy trading. Maybe again, each asset looks a little bit different, so the daily graph for the Alibaba stock looks like this. But here we have a day of breakout. So this would probably be the candle that catches my attention. And then we have initial 3 or 4 days of really good trading. You could have gotten in the initial breakout. That's area number 1. Area number 2 is the initial retest. This happens in, I want to say, 85 to 90% of all of the stocks that trade, that are really good stocks that trade on breakouts. Like, this is a niche strategy that works specifically for stocks. So the first entry point is a breakout here. The second entry point is a breakout and retest. And then the third entry point is a break of the break. So again, this is the first impulse, right? First impulse that we have, and a break of this level. So again, we kind of drag this up here. A break of this level would have been, I guess, here or even here, is the entry point. This is the most safest way, but again, as this example clearly shows, safe doesn't always mean you're going to get the trade is going to happen right away, because logic says that, hey, if it's a bullish stock, it's breaking, and then it breaks the initial stage, it's going to keep going. But I definitely recommend trading the retest. The retest, to me, has the best risk to reward ratio. It has the best potential to gain even more in a short period of time. Again, I'm not a long-term investor. I'm more of a swing trader, a position trader. So I want to keep it open for a few days to a few weeks. And this trade setup offers me the best of both worlds. In the next day, I'm already going to be in the money, so I can move my stop loss up, and I took on the least amount of risk. But again, sometimes it's hard to tell. So we had this initial breakout, and then I got in here, but see how low it is. It broke the previous weeks of trading, and so this entry point on top of being really good, it also is the closest to, okay, actually we're in a bear market. Now, this is a turnaround. And that's why I have so much stuff on my graph, you guys. That's the answer to why I have 2 oscillators, why I have a bunch of crazy lines. And I will tell you guys why I have them on my graph right now. So the moving averages is that number one hint, that best little extra confirmation that my trade is correct. Now let's analyze this graph right here. I'm going to get rid of the Bollinger Bands right now just because they are not necessary to what we're talking about, and then Fibonacci levels, I'll put those later as well. So what do we have on our graph? We have 3 moving averages, a 50 EMA, a 100 EMA, and a 200 EMA. The Bollinger Band actually adds a 20 EMA on my graph as well. That's why they kind of complement each other. But nonetheless, when the moving averages are moving far apart, we're in a trend. So when we're looking for a breakout, this is a confirmation that, hey, actually this breakout, like we can take here. Oh, remember, so I was telling you guys about a breakout and retest. So this is what that looks like. You can trade either on this candle, the initial one that gives you the breakout, or then on this candle that gives you the retest. And if you would have traded from here to here, you'd have made decent profit. Another extra confirmation, the exponential moving average, when they cross with the breakout level. That's also a great place to initiate a trade. So when the exponential moving averages can be used to help you gauge whether it's a false breakout or not. If the moving averages are close together, like they are right here, and we have a breakout in that direction, well, guess what? That signal has very little meaning, because actually we're not in a trend, we're in a flat. And the most likely place that price is going to come back to is the moving average. So whether it's going to come back there to make a rebound, a retest, or it's going to make a comeback to that level to cross over onto the other side, giving us a trade signal. So this strategy, just understanding breakouts, is not very difficult, but it's very, very important. It's very, very key. Just to recap, the things you guys want to do is wait for the candle to close. I can't tell you how many times I've made a mistake trading on the hourly graph and making an entry point before the hour closed, and it's just the start of the hour, it's the first 10 minutes of the hour. Wait for the candle to close, because that actually gives you trade information, like actual trade idea signal information. And then you want to come back to the graph every hour. If you're trading on the hourly graph, then you come back every hour for 10 minutes to monitor the market, monitor those positions that you spent the whole evening or the whole morning to prepare the assets that you're going to be watching throughout the day. All right, guys. Now, as I promised, for those of you that stuck to the end, good job on you. You rock. We are going to give you a risk-free trade. Now, Angie did a webinar yesterday, I do believe, or excuse me, that's right, yesterday. It was about different orders that you can place to maximize the efficiency of the platform. So like pending buy, pending stop, trailing stop. She did a really good job explaining that to you guys. For those of you that left comments down below with the account number, you guys are going to be able to participate in this raffle. So for those of you guys that did not leave your account number, you have a few seconds to do so while I prepare the YouTube comment picker. So we are giving away one risk-free trade for $5. And to those of you that had an opportunity to get in on this, I will randomly pick your comment. What indicator and oscillator you use? Nikki Nix, good question. So I use the Awesome Oscillator and the MACD. I also used to use the RSI, but it gives very similar signals to the MACD. And the Awesome Oscillator is just a little bit more forward thinking. It uses shorter moving averages to then garner the momentum. Like it gives me the red and green lines. It helps me to understand where the momentum is now, like right where it starts before even the cross on the MACD graph. So it's a very, very powerful tool. And so the lucky YouTube winner is, drum roll please, Joel Wong. Very nice topic. We have your ID, sir. Congratulations. You are the proud winner of a risk-free trade. Now, for those of you that did not win, do not worry. We are going to give away stuff all the time. So leave your comments below the video. If I didn't answer one of your questions, go ahead and ask them. Other than that, come back on Monday where I will provide you guys with a video about what's going to happen the following week after the US elections. If you guys want to get all of the information about what to trade, how the markets are going to react, you definitely want to be in that video. I'm going to publish it in the second half of Monday, somewhere close to lunchtime, so that you guys can trade all of the American and European events. Thank you guys for watching. Thank you so much for coming today. I hope my webinars make you guys some money. Together with Olymp Trade, we wish you guys good luck trading out there, and see you next time. Peace.